Question 26. On December 15, 2020, Lisbeth Inc., a US-based company, purchases merchandise inventory from a foreign supplier for 50,000 shillings. Lisbeth agrees to pay in 45 days. After the sales the merchandise, Lisbeth makes sales rather quickly and pays the entire obligation on January 25th, 2021. Currency exchange rate for 1 shilling are as follows. On December the 15th of 2020, the initial transaction days, 1 shilling worth, okay, so this is how much 1 shilling worth. So 1 shilling worth 28 cents of US dollars. Okay, so let's prepare all the journal entries for Lisbeth's company in connection with this purchase and payment. On December 15th of 2020, when Lisbeth purchased inventory from the foreign supplier, because it is a US-based company, it means that all the transactions need to be recorded on the book with US dollars. Okay, so journal entry is to debit inventory and credit accounts payable. And because we need to record the transactions in US dollars, so we need to convert the shillings from shilling to US dollars. So on December the 15th, the total accounts payable or total worth of inventory is 50,000 shilling. In order to convert from shilling to US dollar, we need to know the exchange rate, which is 28 cents. So 1 shilling worth 28 cents of US dollar. So total inventory worth 14,000 US dollars. So 14,000, this is how we calculate 14,000 for the inventory and for the accounts payable. But now accounts payable is exposed to the foreign exchange risk. Okay, so let's move on. Then on December the 31st, this is the day when the company needs to close its book and prepare financial statement. And then when they calculate their new accounts payables, because they still owe the foreign suppliers 50,000 shillings. However, now each shilling worth 30 cents, which means that the shilling is more expensive than 15 days ago. So now there's going to be a foreign exchange loss need to be recorded because now they need to spend more US dollars to get those shillings. Okay, so the loss amount is the difference between the exchange rate difference. So now the shilling increased by 2 cents, and then 50,000 shillings times that 2 cent difference is $1,000. So this is foreign exchange loss. At the same time, on the accounts receivables, it will increase by 1,000. In other words, now Lisbeth need to spend 15,000 US dollars to get 50,000 shillings to pay for the supplier. Alright, so then keep moving. And then on January 25th, 2020, this is the day when Lisbeth pay off its obligations. And now the new exchange rate is 33. It's keep increasing, so which means that there's additional foreign exchange loss for Lisbeth to recognize on this book, and that equals to 15,000, equals to the total 15,000 shillings, and times the new change, an increase of an additional 3 cents. So that's 15,000, and accounts receivable need to increase by 15,000 as well. Okay, and then this is the journal entry to recognize the loss, and then we use this journal entry to recognize the payment of the obligation. It's debit accounts payable and credit cash, and now the amount here is US dollars. Even though on the initial transaction when they purchase the inventory, it only owed the supplier 14,000 US dollars. Now they need to pay the foreign suppliers 16,500 US dollars. It is because the exchange rate changed. the shillings now, each shilling worth 33 cents, 5 cents more than the exchange rate on December 15th. So that's why now why we recognize those foreign exchange laws on this 2 date.